All right, here we go. We're going to dive into end of year San Joaquin County 2021 numbers for the real estate market. So we'll get to see exactly how we ended up. So we'll see inventory. We're going to talk about pending sales, medium average price points, and then go into interest rates and the forecast. We're gonna kind of guess what we think is going to happen next year. I also included a couple links here that are very important to read. One of them is a very long read, but it's important. It's through Forbes, and they interview 20 plus CEOs and actually very, very smart analysts that constantly always have predictions for the real estate market, and they're asking them what their predictions are for the market. Across the board, you saw about the same answer, which are talking about anywhere between 2% to 10% increase in pricing. Now, that ain't going to be as smooth as one thinks. We'll talk a little bit about that. I also linked a article about the rates, which we've been talking about. We saw a big jump in interest rates over the last few months. Right now, we're sitting at slightly over 3.5 compared at the end of last year, which we're at 2.65 or 2.67, which is a big difference. It's going to have a direct impact with the market. We still have a serious housing issue. There's a fundamental issue when it comes down to the supply of housing that's yet to be fixed. So rents are going up. So you're going to have a very, very busy year. You'll most likely see some appreciation. I think that's going to happen all in the beginning of the year. But let's dive into it. Let's see what we look like. So here is the inventory chart. Let's start with the inventory here. So we saw inventory increase at the end of last year. Traditionally, we see that like you saw here. But inventory at the end of the year, last year we had, we ended up 2020 at 289 homes on the market. This last year we had 320, so 25% higher inventory. Now, at the beginning of the year, you're going to see a surge of activity, just like you see every year. Right here, you'll see this pending line just surge up, and it keeps the momentum all the way to the end of the third quarter. You're going to see that here next year. We're going to be really busy. There's going to be a lot of transactions, a lot of pending sales, but you do also see inventory increase. It just doesn't. You see it increase because the pending sales increase, the sales increase, but you'll naturally see it because more people are ready to make a move. Now, you might see inventory increase a bit more this year just because of the interest rate environments. You have forbearances, you have a lot of things that are happening that could cause inventory to increase. So we're going to keep a close eye on it. Traditionally, last year you saw inventory starting to increase here in March. I think this year you're going to see it in February. This next month, we usually see a flattening slight. Sometimes you see it lower, sometimes you see it slightly higher. But I think February you are going to see an increase of interest rates for sure. And you're also going to see an increase in inventory for sure. So we'll see, and we'll keep you updated every month on what that's going to look like. When it comes down to the days on the market, you did see days on the market increase. We ended up at the end of 2020 at 20 days on the market. Now we're at 25, so it's a 25% increase on that as well. So it's just taking slightly longer to sell properties. When it comes down to the median price, we saw a lot of the activity happen, and then it happened, and we peaked up in September, and then we gave it all back. So really, we ended up at 495,000 as a median price. So at the end of last year, we were sitting at 436. So that 13.5% price increase, median price increase that we saw last year, really all happened by April. And we saw it go up to 500 and 512 and then 506 and 511, again 512. We saw that bounce of hitting that resistance and coming back to the support. And at the end of it, we ended up at 495 for a 13.5% increase. Now, in San Joaquin County, I think you're going to see an increase again. You'll see it test the 512 price point again. So some of the analysts are saying 12 to 10% increases in price. I think it's going to be more between 2 to 10. I think it's going to be more between 2 to 5. So we will see what that looks like for us. And but I think it's also going to happen a lot at the beginning of the year. The first 2 quarters of the year is going to be very busy, and as the Fed continues to ratchet up that rate up to close to 3.7, maybe 3.8. I linked an article on this email as well, so you could read a bit more about it. You'll see the market slow down. It doesn't mean that the sellers are going to lose power. Their expectations are going to go down. They're going to have to adjust. Agents are going to have to market homes a little better. They're going to have to clean up properties better. They're going to have to. It's going to show better. The market isn't going to be as forgiving. It is still going to be a seller's market. we're at a half a month of inventory here. Even if we ballooned it up to 5 months of inventory, that would be considered a traditional market. So even if we tripled our inventory, it would still be a seller's market, but it gives buyers some breathing room. We just have to be very careful, and we have to keep a close eye on the interest rates. As the rates continue to go up, buyers' purchasing power will go down. We have to have conversations with our sellers to really coach them through that. I also believe we will see some increasing in pricing. Most of it is going to happen the first and second quarter of the year, but it's going to be a bit bumpy, just like you saw. So hopefully this was helpful for you. Hope you all had an amazing New Year's and an amazing Christmas. It's going to be a very busy 2022. If you have any questions at all, feel free to email me or somebody on the team. If you want an instant valuation on your property, you could click up on the link on this video and you could get an instant valuation. You could also even set you up on monthly valuations, where our system will send you an automatic valuation of your property every month. And if you have any questions or just want to dive deeper on what it would look like for you if you were to sell, usually it starts with a conversation. We understand when people are buying and selling or moving out of state, there's a lot of questions that come from it. Our job at the first appointment is just to give you more information so you could go in deeper in discussion financially to see if it's even the right time for y'all. So hope you found this helpful. It's going to be a busy year and we're here to serve you. Thank you and have an amazing day.